Now, let's look at natural gas. Let's not waste too much energy on other stuff and get to natural gas and have got no energy left and find out that I just flopped through it. This is the 4-hour chart on natural gas. Now, just to summarize, we were short from the red arrows. We hedged over there. We started buying more there and there. We've had lots of positions in this week, some long, some short. Currently, we're long. I'm long from these 3 green arrows, and we have a hedge position at the trend line there. We took profit on some of these shorts. We got a good profit on those. We should have held on. I didn't think we were going to get through the trend line, and then I certainly didn't think we were going to get through the 200, but we did both. And if we look at this on the day chart, before we do that, so I bought at the bottom, I bought at the bottom. We've got a double dip here, maybe a double bottom, and we've fractionally moved above the 20-period moving average here on the 4-hour chart, closing strong on Friday, which I like. We closed strong on the stock markets. We closed strong on Bitcoin. We closed strong on metals, and we closed strong on natural gas. And dare I say, we closed relatively strong on WTI oil too. So everything getting a bit of a bid. And perhaps I think with the everything bid, it happens occasionally, and often that will continue. And I hope that this everything bid, which continued right up until the final moment, the closing bell on Friday, will continue into this coming week, this coming Christmas week, which is light of volume, but steady in structure, in my experience. Low volume, but without the whipsaw and snappiness that you expect, but more steady and consistent moves. I think we're going to get continuations, including natural gas. So having said all that, let's look at the daily chart and see where we actually got back down to on this very dramatic pullback. I said to you earlier in this video, impulse moves that go too far and too quickly. This one didn't actually. I noted last week, the week before, if you remember, that I said when we got to the underside of this line, we should be looking to short. And that's what we did. And that line has held for multiple years now, randomly. I don't know why. It's an old channel which started off here in 2023. You will have remembered if you were trading this with me back then. It's now going to be 3 years ago, almost 3 years ago. And I just left that channel in. And the next time we came up to it over there, we tested it twice, once, twice, 3 times. We got into it on the 3rd occasion and still rejected. On this occasion, we got almost just about touched it and rejected. So an important level or line, a weird trend line because it's sloping up and it's, the price is not attached to it. Anyway, look where we came down to. We dropped down through the 50%. We came down to this horizontal line here at 384. Remember, 375 is a very important level for natural gas. That's exactly where the 618 fib is at 372. We've also got a little gap here, and the price might have to get down into this zone and level at between 350, 375 if we're going to move lower. There's also a cluster of the 100 and the 100 period moving averages right here at that black horizontal line, which I have as a previous support and resistance line. So we've got loads of support beneath us. We haven't even got to the 61.8% Fibonacci retracement yet. We've got through the 50 a little bit, didn't get below the 50 to the 618, and bounced up sort of halfway in between. So it's not the best place for this to turn around. It's not really a support level which I have mapped out. However, it did find support there, and I think the everything rally that we saw across the board and the general drop-off in the dollar, the interest rate cut by the Fed, the weak jobs number, and the strong GDP projections and sales projections are all pretty good for natural gas, bouncing out with extra demand expected through industrial consumption, let alone heating as we move into the colder season in the Northern Hemisphere. So there's a chance that we could bounce out of here. Now, it's not a bad structure or pattern either. Going back to the 4-hour chart, you can see we've got quite good reversal candles, a double bottom. We've broken above the 20-period moving average. We've got 2 good long positions on from the bottom. Yes, we're carrying a loss from there and a hedge from over there. And it's the weekend. I don't know what the weather models are going to look like in a couple of hours when we'll look at them. We'll look in the private group. Thanks for TC and all the others, and Lucky in the private group who help us with all that data. We'll have a look at that. But I have a feeling that we're going to gap up we're probably going to reach up to about $4.15, 20, and even we could get up to like 25 above this resistance and the 50 period. Natural gas often, if it does have a gap, a weekend gap, not a contract roll gap, but a weekend gap, it will often take the opportunity to clear key and important levels. We've seen it before when we saw gaps over and under the 375 level, another key level on the chart. But what I've said basically is I think this is an impulse move driven by demand, not just short-term demand, but general demand, embedded demand, AI, chip, Bitcoin demand, which is not going to go away. More electricity needed, basically. And that this was an impulse move. This is a correction which only got halfway back, a little bit further than halfway, didn't even get to the 618, bounced out prematurely, still a chance of a test. There's a gap there, fair value gap right here, just below us. Still a chance of a test of that double bottom there at 350, 55, if we have to, or that line in the middle, which is in the middle of that fair value gap. So keep all of that in mind. It's looking good, but there is a danger that we have to get to 350, 355, and the original breakout level, basically, the start of this move. If you look at this chart going back a little further, you can see that's the breakout level right there at 356. And as you know, when we get a breakout on any chart, any instrument, any time frame, very often we have to come back to kiss it goodbye, say adios, $3.55, see you next time. There's a funny saying we used to say as kids, see ya, don't want to be here. Yeah, that's it. I like that one. Maybe it's American. I think my kids used to say it at school. So see ya, don't want to be here. And I think that's maybe what it's trying to say, but it may be premature, and we may have to kiss the actual breakout level at 355 goodbye. If we break down through that level, it's a very clear level now. It's very obvious. It's a double bottom. And so we know where the line in the sand is at the bottom, and we know where the target is at the top. The target's back up to the order block, the underside of that short-term trend line, and there's a little gap here where I've drawn that red arrow. You can't see it on this chart, but you can see it on the futures chart. This is the futures, but it's at FXCM. But you can see it on the Henry Hub, and that's over here. This is straight from the Henry Hub, the NGAS F, and there's that little gap at the top. It's a weekend gap, and it has not been filled. Now, going back to the chart, I'm trading exactly the same instrument, the front month futures at FXCM. I'm going to go back to Black Bull next week. But here on the front month futures, that is shown as a candle and not a gap. But it's there, and it may need to be filled. And maybe this arrow has to go all the way back to the top of that gap. In other words, back to where we came from when we started to sell off. So that's natural gas, folks. I hope that was useful. I will get to the questions shortly. I just want to quickly finish off with some of the things. Oil, yeah, I'm still short on oil. In mind, I think we can get down to, I don't want to recover it too much today because we don't have a lot of time, but I think we can get down to 55 and then 50 and then 48 and then bounce all the way back up to the 60s and 70s on oil.
Glued to the screen, watching those candlesticks like a gambling fiend. Futures and options, longs and shorts, price swings that cut like a knife through the heart. Henry Hub's a battleground, bulls against the bears, whispers of a cold front send us into scares. Margins tight, margin calls, nerves they fray, wondering if I'll see green by the end of